Thank you for attending, members of the Audit Committee on the 10th of March 2026. Do we have apologies for absence?
We've got apologies from Councillor Sellers. Thank you, Chair.
Thank you very much. And we have Councillor Southcott as a substituting for Councillor Sellers. Do we have, I'd like to confirm the minutes of the meeting on the 10th of December. Anybody like to make any comments or confirm those? Thank you. I have one comment, which is AC, it's on page 3, which is AC 3225, and refers to asbestos checks. And it said that there would be a register. I've got to find it now. Yes, there will be an asbestos register kept. I was just wondering if that register is now in place.
Yeah, Chair, we did check the position on that, and that has been progressed and is due to be in place by the target date, which was the end of March. Thank you.
Thank you very much. I shall then move on to items requiring urgent attention. I don't have any. The division of the agenda, there's no planned part 2 at the moment. Declarations of interest. Are there any declarations of interest as set out in the agenda? Thank you very much. Could we come to item 6, which is the proposed internal audit plan? Councillor Edmonds.
Thank you, Chair. This report presents the proposed internal audit plan for 2026-27 and gives the committee the opportunity to review and comment on the planned area of audit work for the coming year. Internal audit is a statutory requirement for local authorities and provides independent assurance that the council's arrangements for risk management, governance and internal control are operating effectively. The audit service is provided by Devon Assurance Partnership, and the plan is being developed using a risk-based approach, taking into account the council's key risks, corporate priorities and discussions with senior management and members. The plan focuses on a range of important areas, including core financial systems, governance and financial planning, service areas such as housing and planning, and cross-cutting risk such as cybersecurity, procurement and information governance. As in previous years, the plan is designed to be flexible so that internal audit work can adapt during the year if new risks or priorities emerge. The work delivered through this plan will allow the head of internal audit to provide an annual opinion on the effectiveness of the council's overall control environment at the end of the financial year. Members are therefore asked to review the proposed plan and confirm that they are satisfied with the areas of coverage for 2026-27. Thank you, Chair.
Thanks, Councillor. Before I ask the internal auditor to say something, I'd just like to thank the Section 2151 officer and the internal auditor for the workshop that was held, I think, on the 24th of January, which allowed us to make some input to the internal plan. And I thought it was a very beneficial exercise. So, would the internal auditor like to make a comment on the paper, please?
Thank you, Chair, and thank you for the introduction, which does cover the most of what we need to go through. So, as the Chair mentioned, the workshop that was given earlier in the year in January hopefully gives you a really good insight to how we've got to this draft plan. As already mentioned, it is a flexible plan and we do review that as we move throughout the year. So some changes may happen as we go throughout the financial year. Any changes will come back to the committee with reasons for that, which will be in line with risk in terms of risk scores changing. But that will be updated as we go through the committee throughout the year. In terms of the content, that hasn't changed from the workshop that we held back in January. In terms of what will be covered over the end of these areas, we would do a detailed scope at that time with the relevant clients in terms of that, and we can feed that back at audit committees. But if you've got any thoughts in terms of any of the topics on here, more than welcome to have a conversation to feed into that, and we do agree a scope for each piece of work. Happy to take any questions that the committee may have.
Thank you. Are there questions? Councillor Chief.
It's something that I have to say it occurred to me after our workshop, and that was whether within the audit process, the sort of volume of work that the council is obliged to do. I'm thinking there are not just LGR on the horizon, which is a sort of large piece of work that wasn't there before, as it were. It's sort of been plonked on top of us, as it were, which is going to occupy a huge amount of the senior management leadership team's time. But there are other things going on, renegotiation of quite complicated contracts and what have you. I just wonder if one of the things you look at when you're doing the audit process is the number of, probably kind of phrase this incorrectly, distractions that the senior management is obliged to be on, rather than concentrating on the core services, if I can put it that way. Like just the volume of work that has to be done. Is that something you look at?
Obviously, as a partnership, we're auditing a number of different clients, and I think that's the same issues are there across all our clients. There's lots of other distractions, unfortunately, in terms of LGR being one of them. There's other priorities, etc., and therefore our role is to give that assurance back in terms of the work we're looking at for the year, that actually what should be happening on a regular basis is still happening. So there may be some issues coming from some of the work that we do, where some of our findings is related down to resource, because resource is being directed elsewhere. If that is the case, then that's something we would highlight as part of our audit work. Is that helpful?
Yeah, thanks. It just seems to be an awful lot going on.
Thank you. Councillor Oxford.
I've got a question that's on a sensitive commercial basis with regards to community services, economy and infrastructure. So can I propose part 2, please?
We're resuming on item 6, the proposed internal audit plan. Do members have any comments or questions on this paper so far? Could I just refer to, I think it's page 13, about LGR then? And it's probably about the terms of reference. I think a point was made earlier about huge demands that have been made by all councils on LGR in this coming year and the year after. So it's a question about what it will be in the scope of the audit in the coming year, and will the internal auditors have the resource to do it?
In terms of LGR, we have LGR as a topic on all our clients across the partnership. So we are going to be investing time into LGR. In terms of what that looks like in terms of a work programme, we're not quite there yet, but we're linking in with each authority in terms of the work streams that are happening for LGR. So each manager is linking in to understand what the action plan is as such when we've got a decision coming later in the year in terms of what we know is going to be happening going forward. We look to spend some time therefore on LGR, probably a bit later in the financial year is my thoughts at the moment. Can we offer some critical friend consultancy advice to help support in this year, and then definitely into the new financial year, the following year, so when we're going into 27, 28, then we will envisage a plan that looks very different to what you have in front of you today.
Thank you, it's very helpful. Anybody else got any comments or questions? Well, thank you very much. Can we recommend the internal audit plan? Yes? Yeah. Thank you very much. Item 7, progress on the 25-26 plan. Councillor Edmonds.
This report updates the committee on progress against the 2025-26 internal audit plan. It summarises the audit work completed so far, the assurance levels provided, and the areas where improvements are recommended. Since the last update, most completed audits have received reasonable assurance, with a small number achieving substantial assurance, which shows that the council's systems and controls are generally operating well. The team currently has several audits still in progress, and these will be reported back to this committee once finalised. The findings help us identify where controls can be strengthened, and in all cases, management have agreed actions issues raised. There are no major concerns to highlight at this stage, and audit activity continues to support good governance and risk management across the council. Thank you, Chair.
Thank you. It's a very positive report. Do we have comments or questions? If we don't, I have a question on page 34, and it refers to Operation Sheen. I just wondered if you could remind me what Operation Sheen was about.
Thank you, Chair. That was a recent exercise we did to look at our business continuity procedures, and it was an IT outage, and we had to simulate what we would do in that situation and look at what procedures we had in place for that and learn from that accordingly.
Thank you very much. Did it result in lots of actions?
It's definitely a busy day. And we've learnt from it and fed back and looked at the findings of that day as well. So, yeah, a learning exercise.
Thank you very much. Just following on to that, still on page 34, there's interdependencies and third-party risks, where it says there's a lack of cohesive mapping of the most critical activities, MCA. And I just wonder what the sort of timescale is for the completion of this exercise. It says on the report things are happening. Page 34, still on the same audit, business continuity.
Yes, thank you, Chair. So that's about mapping all our key IT systems. and looking at the independencies around those. And so, for example, in finance, we use Civica Financials, and we identified that we needed to move that to the cloud. And once the accounts were closed last year, was it September or December that we moved it to the cloud? I think it might have been December. But yes, that has been fully completed now. And also use of things like the S Drive, we have moved that to SharePoint. So within each service, it was about mapping those key systems, and Revs and Bens has also moved to the cloud as well. So that's what that recommendation was around. But as far as I know, I think the vast majority of those big systems have been done now and have been migrated to the cloud. Thank you.
Thank you.
Thank you, Chair. On the section on homelessness, it's good to see the reasonable assurance opinion. Thank you for that. It explains the savings that council's making from buying a house rather than using rental accommodation. Are there any plans to increase the use of buying our own properties, to use that in future and reducing the reliance on rental properties? Do you want me to repeat the question? Yes, please. The section on the homelessness refers to the savings that the council are making through purchasing property rather than renting property to support homelessness. And my question is just around, are any plans to extend the use of purchasing properties and reducing reliance on rental properties?
Yes, thank you, Chair. So last week the Hub Committee considered a report on, which is called LAF4, which is Local Authority Housing Fund. This is a government grant programme. We have very successfully bought houses through LAF 1, 2 and 3. So at the moment the council has bought 13 properties, and last week at the Hub Committee members agreed to buy 4 more properties. 2 are for resettlement, 2 are for temporary accommodation, and that will mean that we would have taken advantage of 2.35 million of government grant to purchase those. So we will have 17 properties going forward. And as part of that report, the head of housing did estimate that through having those 13 properties, we have saved about £180,000 as a direct cost. And we've also avoided 2,500 nights in less appropriate forms of temporary accommodation for families and their children. So yes, the LAF scheme has been very successful for the Borough Council. We are hoping there will be future tranches of, LAF 5, LAF 6 going forward. Not all councils took up the government offer of grant funding. So when we very successfully went through LAF 1, we bought the properties very quickly. We were then offered LAF 2, but not all councils took advantage of the first LAF stream. So yeah, that's something that the council has been very proactive in levering in, that nearly £2.5 million of government grant. Thank you.
Well, thank you. Do you have any?
And maybe I can just add to that by saying that we've also converted in the recent past 2 properties in Tavistock, which has given us another 4 units of temporary accommodation as well.
Yes, at 20 Plymouth Road. Yeah.
I think it's very positive. Do we have any other comments, queries? Councillor Chief.
Well, it's somewhat flippant one, but I was drawn to the little pie chart diagram in the report, and one of the questions is, the audit scope was agreed with you, to which the answer is either it was or it wasn't. But there are 4 choices available on the scoring system: very satisfied, satisfied, adequate, or poor. I'd have thought that was a sort of binary question. It either was agreed with you or it wasn't.
This
Just a comment.
this is the customer survey results.
Yes.
Yeah. So I just wonder if you might want to say a few words about these pie charts in general, about how you got them, and then perhaps.
I haven't seen it before.
Okay.
Thank you, Chair. So each audit assignment that we undertake across the partnership, then we do ask for feedback from the client in terms of how that audit went. Obviously, this shows you all the different questions that we ask as part of that. And then the final one in the bottom right-hand corner gives that overall satisfaction score. So we update these each quarter and provide them as part of our progress update report to our clients. So apologies if you've not seen that before. It's something we have been producing and demonstrating for a while. I'll take your comments on board in terms of that question. It's always good to revisit and see if we are actually being as clear as we can be in each question. What we find is that we're auditing, we are, therefore, we don't always get full scores back. We don't get responses for all the audits that we carry out. But what I did say on the whole, it does show that overall it is a positive feedback that we do get on the work performed.
Thank you very much. Any questions, comments? Are we happy to approve the recommendation? Thank you very much. There's item 8, the external audit plan.
Straight to me, or do you want to do no intro? Oh, okay. No, needs no introduction, clearly. Thank you, Chair. So our document in the papers today is our external audit plan for 25-26. At a high level, the objectives for the audit are the same as previous years, to make sure we can give a true and fair view opinion over the financial statements. And ensure they're being compiled with in accordance of the CIPFA Code and the Local Audit and Accountability Act. There's the other part of our role as well that sits alongside that with our value for money work that we do that comes into our annual report, where we look at the financial arrangements in place around financial sustainability, governance, and improvement of economy efficiency and effectiveness. And this document you've got today sets out our initial risk assessment for the external audit for this year. At a high level, it's broadly consistent with the prior year. There's no significant changes in accounting standards or auditing standards that are going to impact the approach significantly this year. So the audit risks that are in this document are the same as last year, except last year we had one additional risk around the implementation of IFRS 16, the new lease standard. That work was completed last year as the first year implementation. That went very well. That's now kind of business as usual, so it's not been considered a risk area for this year. So the other risks are the same as last year's. So there's the one that's driven by auditing standards, which is around management override of controls, which is about looking at key estimates and judgments within the financial statements, and also management's ability to bypass control environments. So we look at things like the journals that are processed directly into the finance system as part of that work. And then the other areas are around some of the key estimates and judgments there as well. So the valuations, so you've got the valuations of property, plant and equipment, valuations of investment properties, and the valuations that are linked to the pension scheme as well. The bit that has changed year on year there is around the property, plant and equipment. So there's a new guidance out, which I think is a step forward in terms of actually some efficiency savings for both management and making the process more straightforward in terms of the valuation process. So there's the requirement now going forward from this year onwards is that we move to a 5-year rolling cycle of full valuations and then use indexation in between. The council's been on a 3-year rolling basis before, so effectively value a third of the assets each year. So this year the plan is still that the final third of this last cycle is going to get valued, and then we move to this new process from next year, where we can agree potentially, for example, next year, because everything's been revalued in the last 3 years, we could just uplift everything by an index for next year, or you could have a more detailed valuation done. So there's more flexibility in how that works going forward. There should be some ability to make some savings for management when we were talking about a minute ago, extra work required and pressures around things like LGR. This could be one of those things that actually could relieve a bit of pressure, at least in terms of the year-end accounts process. So the guidance around that is still being finalised in terms of actually what kind of indices would be appropriate to be used going forward. So I think for the current year, the fact that you've got that continuation of your existing cycle of doing 1/3 its full valuation is sensible. The work that we do anyway on the rest of it, we look at the other 2/3 that aren't being revalued and look at when they were last valued and consider sort of movements in market values and indices anyway to make sure that we're comfortable that there's nothing materially misstated. So we did that work last year and the year before. And as things are in the current economy environment, things like building cost indices, market values aren't moving hugely materially year on year. So that process is likely to be consistent with the prior year, that we could be comfortable with this kind of approach of just doing a 1/3 valuation this year. Otherwise, the approach is very similar to prior year. The team and the timetable is set out in there, so we've got a consistent team in the approach. The timetable, again, we're looking to get this work completed over the summer so we can report back to you in the autumn audit committee and get things signed off well in time for the deadline. This is the first year of the sort of moving forward of the deadline this year, so you'll see the backstop date in the back of our report now is moved to the end of January for this year. And then next year, we move into the same calendar year, so which would be another step forward again. But we're already operating under that timetable already with you, so there's nothing significant to change there from this respect. Happy to take any questions.
Oh, thank you very much. Do we have any questions?
Just one brief one. You mentioned LGR and the fact that that's impacting on almost everything. Has LGR added to the audit costs?
There's no the audit cost change this year is just an inflationary increase from the prior year, and there'll be no change. There'll be a reduction in that. Last year there was an allowance for the IFRS 16 in there. There's a fee variation, so that was a one-off. So the overall fee proposed this year essentially is last year's core underlying fee plus inflation. So it doesn't add up to anything in terms of the audit fee cost at the moment. I would not expect that to impact the cost. It will filter in through things like the value for money work. In future years, it'll also filter in to, I guess, the ability for management to continue to deliver will be the thing that we need to focus on. If there's cost pressures, that could potentially lead to fee variations if things aren't being prepared for us on a timely basis as a result of changes. But we don't expect that to be the case.
Thank you. Any other comments? Ms. Hutchins.
Just a question really for Lisa and the team. Nathan talked about changes in the valuation of plant and assets. Are we on top of that? Are we well prepared?
Yes, we're on top of that. We've already obviously been in dialogue with Bishop Fleming, and we've also spoken to our valuers, so they are fully aware of the requirements and are able to do it within the timescale that we've got on our close down plan. So all in hand.
Thank you very much. If nobody's got any questions, I have one. It's on page 16, which I thought was very, very good on the sector updates. I found them very valuable. And there's an update on the annual governance statements and the publication of a new document. I wonder if you would like to say something about that.
I think the section itself that summary there is probably sufficient. I think for your purposes, essentially, there's additional guidance on content that needs to be included in the annual governance statement that applies for the first time this year, and those sort of 5 bullet points there are the key changes really in terms of the content. So it's kind of fine tuning a lot of this, what goes into their existing document. But I think one of the key things there is actually having that. And I think some of these things are probably built into yours anyway in best practice. So, having that executive summary and assessment of effectiveness, that's kind of built in there anyway. It's just that clarity that you definitely need to have that overall opinion on whether your governance arrangements were fit for purpose, which is the new clarity of that requirement there.
Well, thank you. If you like, the hidden agenda behind that question was, are there any major changes that we have to make? And the answer sounds to me like no. That's great. Thank you. Are there any other questions? Are you happy to note the report? Well, thank you very much. So we're now at agenda item 9, which is capital strategy, treasury management, investment strategy. Councillor Edmonds.
Thank you, Chair. This report brings together the Council's three major financial strategies for 2026-27. As the Chair just said, the capital strategy, the treasury management strategy and the investment strategy. Together, they explain how the Council plans, funds and manages its long-term assets, borrowing and investments. The capital strategy sets out the projects the Council will be investing in next year, including ongoing work on Oakhampton Railway Station project, housing schemes and essential upgrades to our assets. It also highlights how these projects will be financed through a mix of grants, the Council's own resources and borrowing, and shows that the overall borrowing requirement for 2026-27 is expected to be £23.6 million. The Treasury Management Strategy explains how the Council manages its cash, borrowing and long-term financial planning. It confirms that the approach remains cautious, focused on keeping enough cash available for services while borrowing affordably and sustainably. It also sets out the limits and indicators, including an overall borrowing limit of 50 million. And finally, the investment strategy describes how the Council manages its financial investments, putting security and liquidity first, and explains the rules the finance team follow to manage risk, including credit checks, country limits, and ESG considerations. It also covers a small number of longer-term investments, such as the CCLA Property Fund. Overall, these three strategies work together to ensure the Council's finances remain prudent, affordable, and sustainable, and the committee is asked to review them today and recommend their approval to Council. External Treasury Management training was arranged for all members in March. In fact, it was this morning. To ensure members have up-to-date skills to continue to make capital and treasury management decisions. Thank you, Chair.
Thank you, Councillor. I'd also like to thank Section 151 officer for arranging the treasury management training. I thought does that regularly, and I think extremely valuable and gives us a big groundwork. So does anybody have comments and questions on this paper?
Again, sort of beating a familiar drum now, LGR. Has the government come forward with any information about what we're supposed to do with our assets come LGR?
Not as yet. So in terms of the timescales, there's obviously a consultation for Devon, a government consultation online at the moment. Responses are due by the end of March. The process will then be that by the summer, government will announce which configuration of local government reorganisation there will be in Devon. What will follow then, around about September time, will be what's called a statutory change order, and within that there will be timescales set out for an implementation plan, and there will be certain requirements within there. So at that point, that's when we will get into the detail around a detailed implementation plan once we know what the government intend for Devon, and once we've got that statutory change order. So I think within 6 months we will have a lot more detail around that.
Do we anticipate that some of the longer term investments will be novated? Is that what we're sort of anticipating?
Yeah, in terms of the council's own investments, we tend to keep them short term, so they are all within a year. If I think about other Devon councils, with the exception of, we do have £500,000 in the CCLA, which is a long-term strategic investment. That will just carry on. All of those investments will just novate to whatever the new unitary authority is. So our treasury management investments will novate, as will all the other Devon councils, and it'll all go into a new authority. I think a question was asked in this morning's training about borrowing. Well, all of the council's borrowing is fixed term, and again, fixed interest rates, and that will just all go into the new unitary authority. along the same lines. So yes, there will be quite a lot of work to do on the implementation plan when we get to that stage. Thank you.
Is that okay? Councillor Oxborough.
Thank you, Chairman. Table 2.11, in paragraph 2.11, the financing of capital expenditure. The figure of 17,413,000, do you have any breakdown of that and how that was made up? I know it was for the interchange, primarily, I assume. So a lot of that, I'm assuming, would have been capital grants. But do you have the breakdown, please?
Sorry, Councillor Oxford, which page is that on?
It's on page 74 of the pack, which is page 72 of the document. And it's table in paragraph 2.11.
Oh, it's 2.11, page 72.
Oh, is that the 17.4 million?
Yeah,
did you say?
what proportion of that was the government grant?
Ah, right, okay. So in terms of that, the majority of that would have been funding for the Oakhampton Interchange Railway, and that would be, that's an £18 million project. There's, I think it's 13 million is funded by the Department of Transport, so a large part of that 17.4 million will be that. The other thing that will be in there will be government grants for disabled facilities grants, so that's better care funding that we get from Devon County, and there's also an element of HUG funding in there as well. That's the it's going to be called the Warmer Homes grant in the future. Those will be the main government grants that are in that 17.4 million. I'm trying to think if there's any other external grants. I think those are the big ones. There will be LAF funding is in there as well, government grant for the local authority housing funds. That will be the other amount of government grants in there. So these are all capital grants for the capital programme. So in terms of that 19 million that we're estimating to spend on the capital programme, the council's only using 1.1 million of its own funding, and 17.4 million is coming either from Section 106s or government grants through capital. Thank you.
Hutchins.
Thank you for all the papers, and all very comprehensive, and lots of good information in them, and really good training session this morning. My question really is what's changed from previous years, and what, as a committee, should we be taking note of? I assume it worked really well in previous years, so what should we be noting as any changes, really?
Yeah, so the main updates will be around the council's capital programme. So looking at page 72, obviously we have projected forward now the capital programme not only for 26-27 but for 27-28 and 28-29 as well. So we have moved everything forward 1 year to 28-29. Obviously, if local government reorganisation happens to the timescale that we think it will, and currently programmed by government, then the last full financial year of the Borough Council will be 27-28. So we've carried on estimating into 28-29, but in the knowledge of the fact that we may be in a new unitary by then. So we've updated the capital programme, we've updated all of the financing sources. The only other thing that really has changed, we haven't changed any of the operational boundaries or authorised limits, so that has remained at 35 million and 50 million. The only other thing that's changed is our Treasury Management income target. So last year we were estimating, or this financial year we were estimating 950,000 income from Treasury Management. In the strategy for next year, we think that might be higher. We think it will be 1.1 million. But that was based on interest rates coming down to 3.25 during 2026. And as we heard this morning in the training, we think interest rates may either be held or could possibly go up to 4% when the MPC meets later in March. So we may find that our income levels from Treasury Management may be higher than we have forecasted. In terms of the capital financing requirement, that hasn't really moved. So if you look back to last year's strategy, I think our CFR was 23.7 million, and in this report we are projecting it to be 23.6 million, so not a huge change, and that's because we're not planning on borrowing any money for in the next financial year, and that's quite good really, because we can see that borrowing rates have significantly increased over the past 2 weeks. So the fact that we don't have an urgent need to borrow is quite good. We've also kept our credit ratings the same. So in this report, we are saying a minimum credit rating of F1 for fixed short term or A- for the long term. So we generally invest with banks and building societies within the UK, and we are recommending to members that we maintain that strategy. It is a low-risk strategy, but in terms of the investment income that we are getting on that strategy, when we do the benchmarking, we are always above the average level. But yeah, the key thing for us is if we invest £1 million, making sure we get that £1 million back. So it is about security first, liquidity second, and yield third. Thank you.
Thank you. Do you have other questions? Councillor Southcote, no? Could I just ask, or make an observation? No, a question for us on page 71 about climate and diversity. There's a little bit of narrative which essentially says we're going to do something, but it doesn't give any numbers or anything like that. I just wondered if you'd like to enlarge a little bit on that.
Yes, thank you, Chair. So this was in our capital programme for next year. The amount is £24,000. This is where we would put, or we would look to do some energy performance certificates, trying to get those up to a minimum of a C on the council's industrial estates and estates that we own. So we think £24,000 would enable us to bring those EPC ratings up to a minimum standard of 3. I did have a look back at the capital programme around climate and biodiversity. We also have a bid in there to spend £100,000 on some PV solar on the Oakhampton Leisure Centre as well. So looking at our capital programme for next year, those are the main projects around climate and biodiversity.
Thank you. I've got a question, a clarification on page 114. Sorry, dyslexia rules here. And it says the council is asked to approve the following treasury indicator. There's about £500,000 on. I just want, are you asking the audit committee to comment on that, or just asking the council?
I think it's both, probably, Chair, because the reason these strategies are before us today is it's the role of the Audit and Governance Committee to scrutinise those strategies and to check we feel that they are reasonable before they go forward to full council at the end of March. That indicator on 1.4.5 on page 114, that's saying that we recommend that the only amount that we invest for longer than a year would be £500,000. If, for example, that figure was, say, 10 million, then you might want to challenge that and say, well, actually, as officers, you don't want us investing out 10 million, for example, for a period over a year. So it's whether the committee feel comfortable with the fact we're only recommending £500,000. We've obviously taken advice on that from the Treasury Management Advisors that gave the training this morning. I think for the size of portfolio that we have, for the cash flows that we have coming in and coming out on a monthly basis, we wouldn't want to tie up the council's funds for longer than a year by more than about £500,000. And I think during COVID, some councils did were caught out a little bit where they had investments tied up for the longer term, and then all of a sudden they needed cash flow, and they found themselves in a position of having to go to the PWLB to actually borrow money. So, you know, it's about does that feel a reasonable amount? Thank you.
Does the committee have any views? My only comment would be this is not a change, I guess.
That's correct. Yeah, it was
So
£500,000 last
this
year.
is steady as you go. And the only reason for changing would be inflation, but that's not really worthwhile bothering with. So I take it that the committee is content. Do we have to put that into the recommendation, or would that be subsumed within?
I think it would be subsumed within the recommendations on the screen, Chair. Thank you.
Thank you. Anybody else got any comments? Well, are we happy with the recommendations? Please show of hands. Thank you. Thank you very much. So we've got item 10, the strategic risk update and framework. Councillor Edwards.
Yeah, thank you, Chair. Well, this report provides an overview of the key strategic risks currently facing the Council, and it sets out how the Council is managing those risks through the established risk management framework. The purpose is to ensure that members have clear visibility of the most significant issues that could affect the delivery of our services, our finances, or our wider organisational priorities. The report highlights where risks have increased, where they're reduced, and what mitigating actions are underway, whether that's through service improvements, financial controls, partnership work, or strengthened governance processes. It also reflects the dynamic environment we're operating in, including the ongoing financial pressures on local government and the wider uncertainty created by local government reorganisation. Members are invited to review the updated risk register and consider whether the right risks are being monitored at the strategic level. Thank you.
Thank you, Councillor. Comments, questions? Councillor Cheadle.
Yeah, I was interested in two of the risks, the business continuity preparedness risk and the cybersecurity threat risk. They have remained static on the risk register, looking at the risk histories, little graph in the corner of the reports. And you could say that's somewhat surprising, given the amount of work that's gone into things, for instance, cybersecurity. We seem to have been doing a lot of work on cybersecurity, but the risk hasn't reduced. Is that because the volume of cybersecurity has gone up commensurate with the amount of work we've done to pull it down, or hasn't the work we've done been particularly effective?
Through you, Chair. I think it's fair to say the work we have done has been effective, but it's a constantly evolving situation. You know, as soon as organisations put measures in place, people are trying to crack them. You know, those bad actors are attacking systems in new ways all the time. So I think it's right, and I think if looking at it, the likelihood, I mean, we said the likelihood is it's likely there will be a cyber attack. And I think that is generally the recommended position, is that it's when, not if, you are likely to be subject to an attack, either successful or not. So I think it's right that the scoring stays where it is. I think it probably is one of the biggest threats facing the organisation. Day in, day out, we've got 600 people using our systems, receiving emails that could contain malicious content. So I think it's right that they sit there, and aligned to that is business continuity preparedness, because as a result of the continuously evolving cyber threats, we need to continuously review our business continuity plans.
Yeah, I wondered if that was the case, that the two risks are inextricably linked, that the thing that's keeping the business continuity risk high is our concern about cybersecurity.
It's certainly one of the main ones. Yes, absolutely, Councillor Cheadle.
Okay.
Yes, I've got a question. You know, you look at any particular score, 16 in this particular instance, do we have a target for what we're aiming for in each of these particular risks? So that if we did, that would give us a measure of comfort that we were getting somewhere towards it or not.
Absolutely. Our risk management strategy sets out, and I think it's actually on page... which page of the agenda is it? Sorry, I've only got the single document open. But within the papers, there is a risk management approach and a risk management treatment page, which sets out where the risks fall. So, sorry, have you got the full agenda there? What page is it, Lisa? The full agenda. Page 124 of the full agenda sets out the risk management treatment, and that's where we sort of define the level of risk that we're prepared to accept. So, for example, anything scoring 20 or above should be managed down urgently. We don't define where, because I think it's fair to say what you want to do is bring the risk down as low as possible across the board. But certainly in terms of those classifications and the focus of the management team, the framework as set out on this page is the one to focus on. Anything scoring 15 or above, seek to influence short to medium term reduction. Next category, monitor and manage and influence a reduction. And there are levels of risk that we accept. Most of those don't come in front of this committee. If they do, it's because we're closing them off of the strategic risk register. Those sorts of risks sit at a service risk register level. Don't know if that answers your question, Councillor Dexter, but there's no firm in our approach. We absolutely could.
Well, yeah, it just answered the question, but it also answers a question, but it wasn't quite the one I asked. No, quite seriously, it's quite helpful. It's a very helpful answer. But bear with me for a moment, because I'm just trying something out, if you like, in my mind. That, okay, the risk, we're trying to move it down. We're always trying to move it down. How do we know, how does the committee know that you are successful or you're moving towards a target? You know, because 16, it could be, for example, that 16 is always going to be 16 because it can never be reduced. That's not a problem. It's just what it is. But if you're assessing that it should be at 10, I'm making the numbers up, it should be 10 and it's at 16, our question would be, what's going on? What have you got to do, etc., to get it down? So if it's not possible, I mean, all these scores are fairly subjective anyway, but it's just to give us some sort of assurance that there's a direction of travel.
Thank you, Chairman. Ultimately, you'd like to see a downward trajectory. You know, we put the risk scoring history on the slides. You would want to see a downward trajectory. It's not always possible, and I think where that's the case, we do set out that's the case. But that's ultimately what you're looking for. We don't set a target score, but you'd certainly be looking for that downward trajectory of impact.
Oh, thank you very much. Comments? Well, thank you very much. Are we happy with the recommendation? Yeah, okay. Thank you very much. So it's item 11, is it? The budget book.
Yeah, thank you, Chair. Well, this is the budget book report. It shows the detailed breakdown of the revenue budget that full council has already approved for 26-27. It explains how funding is shared across the 3 directorates and highlights the main changes from last year, including the cost pressures and savings built into the new budget, resulting in a net pressure of 1.094 million, all of which has been allocated to the relevant services. Members will also note the inclusion of several technical adjustments and environments. These ensure that budgets are aligned with operational responsibilities and current service arrangements. Importantly, they all net to zero and do not alter the overall financial position. While this report itself has no direct financial implications, it forms an important part of the Council's governance framework. I would highlight to members that the Council recently received a green rating across all areas in the External Auditor's annual report, confirming the strength of our financial management, governance arrangements, and value for money approach. The budget book supports all the themes in the council plan and reflects the consultation carried out during the budget process. To set the budget, the Hub Committee first reviewed the medium-term financial strategy in early November, followed by a series of focused budget meetings through December, January and February. These included Hub Committee sessions, an overview and scrutiny meeting to review the draft proposals, an all-member budget briefing in January, and finally, full council approving the budget on the 17th of February. Thank you, Chair.
Thank you, Councillor. Councillor Johnson.
Thank you, Mr. Chairman. Just putting here the budget book 26-27 doesn't reflect the huge amount of work that goes in by so many people to get to where it is. So I'd like to thank the finance team for all the work that they've done with this and everybody who's been consulted, because it's obviously the budget holders as well that need to be consulted. Could we have an outline of how this was achieved, how we got to the budget book and the risks taken into account in getting to its final position, please?
Yes, thank you. So we started the process sort of in the autumn. We started putting together the council's medium-term financial strategy, and that was quite difficult for us this year because we knew that the government were going to bring in some new local government reforms. We knew the government's new funding formula was going to come into play. We knew that the government were going to reset the business rate baseline. So we made estimates in that medium-term financial strategy of what we thought that new modelling was going to look like. And then when the finance settlement came out just before Christmas, fortunately our modelling was quite accurate in that we weren't very far away from where we thought the government were going to go. There were a series of meetings through October, November, December at the Hub Committee. We had a Review and Scrutiny Committee to review the budget proposals in mid-January. We had a 3-year settlement from government around December, but what was very disappointing in that was that you could see that rural areas and certainly district councils such as ourselves as the Borough Council, we received the least amount of funding of all of the classes of authorities. So if you compared rural authorities to, for example, metropolitan districts got much more funding out of the funding formula than we did. So we made representations to government on that. The government issued a final finance settlement at the end of January. Unfortunately, we didn't receive any more funding through that process. And then in February, members set the council tax. That was a 2.99% increase in council tax. And all of the things that you can see within this budget book. For example, there's a column there that says 26-27 budget changes. Those were all the things that were approved by members as part of that budget process. We've also done some environments as well, which is shown in that column. So that's where member staff may have moved departments, for example. We've changed their reporting structure, and then that gives you your final base budget. In terms of risks, we looked at all of those budgets around what are the risks around that. So, for example, if we just think about, say, the Treasury Management Income budget, in putting that up to 1.1 million, we probably did take a risk-based approach in that we looked at the interest rate forecast from MUFG, we made an estimate of what income we think we might get from Treasury Management, and then we built that into the budget. So that would be the same things like planning income. We spoke to the planners and said, well, how much income do you think we'll get for 26-27? also looking at where we thought there was extra demand, particularly around things like temporary accommodation. But again, we knew that we would buy our own properties, so that would help us to reduce the expenditure on temporary accommodation. So I think we did take a risk-based approach to all of the budgets that were in the budget for 26-27. Thank you.
Thank you. Comments? Councillor Cheadle.
Looking at page 173, which is Annex B on budget pressures table, I was drawn to the third one down, inflation on goods and services. The base budget was 100,000 and the 26-27 budget is 275,000. Seems a big variance.
Yes, so these are just changes from the base budget. So that 275,000, that would be inflation on goods and services over all of the council's services. So that will mainly be things like utilities increases. There will be an element of things like business rate increases in there as well. So we thought that was going to be higher than we had. So when we set the budget for 25-26, we had 150,000 as general inflation over all of our base budgets. So with inflation being slightly higher, we did put that up for 26-27, mainly for things like utilities. There were some other things things like training as well, that we put a bit more. We could see that the amount we would need to increase the base budget by was a bit more than we'd had in previous years. Yeah, so that was an aggregate of quite a few things, wasn't it?
So it's the cumulative result of all the little bits of inflation.
So it would be little bits across lots of budgets, yes.
Okay.
And we just show it as one aggregate amount.
It also includes inflation pressures for IT contracts. You'll have seen that in our Hub Committee and our budget monitoring report. So as part of our budget, we recognise what our pressures and savings are in year and make sure we're building that into the budget in future. So it covers that area as well.
Yeah, thank you very much.
Thank you very much. I'd like to thank you as well for all the hard work. And as you know, it's not the role of the Audit Committee to, if you like, delve into the individual, because the explanations we've received have given us a lot of assurance that it is properly governed, properly controlled, and the right people are doing the right things. So are we happy to note the recommendation? Okay, thank you very much. Shared services methodology.
Thank you, Chair. This report explains how we share the cost of our joint services with South Hams for 2025-26. Most of these costs relate to staffing, and the split is based on the actual caseloads in each council area. We review this methodology every year, and it has been in place since the partnership began in 2007. The system ensures that each council pays a fair share based on the work carried out. This year, applying the updated caseload figures means West Devon will incur an additional £54,000 in staffing costs, mainly in waste and environmental health, where the West Devon share of the workload has increased. Most service areas remain within the normal 3% tolerance level, so no major changes have been made beyond these adjustments. Details of all allocations and the methodology used are set out in Appendix A. Our external auditors identify the sharing of costs between West Devon and South Hams district councils as a key risk area. In summary, this report confirms that the cost-sharing arrangements remain fair, transparent, and working as intended.
Thank you. Comment? Could I ask a quick question on the page 187 about human resources being split from 82% to 18%? Seems pretty arbitrary, but the 50/50. I just wonder if you'd like to enlarge on that for me, please.
Yes, thank you. So this is around the council's organisational development strategy. So this would be around things like training, investment in staff. It addresses things like apprenticeships and learning. And one of the things that we're encouraging all our staff to do is to think about ways that they could either undertake training before LGR comes along in April 28, or whether that's internal training as well, sort of upskilling each other, if you like, and working on different areas within your own team. So in terms of that organisational development strategy, the head of HR, we are saying would be 50/50 because that's a strategic document and they're spending their time across both councils equally, as is one of the principal human resources officers. The other principal human resources officer we've said is 100% South Hams because they work purely on the waste service and liaising with the workforce. South Hams has an in-house waste service, whereas the service for West Devon is contracted out. So although the percentages there, it is only actually 3 people, 2 of which we are saying would be shared 50/50, and 1 person would be 100% South Hams and 0 to West Devon. Thanks.
Thank you very much. Are we all happy to note that report? Thank you very much. Item 13. Annual report on the Code of Conduct and Standards.
Indeed. Yes. Thank you. Thank you, Chair. Well, this is the annual report on the Code of Conduct and Standards for both South Hams and West Devon. The Council has a statutory duty to promote and maintain high standards of conduct, and this report summarises the Council's arrangements are working in practice. It also outlines some of the trends we're seeing, including a noticeable rise in complaints during 2025-26, particularly those alleging bullying, harassment, disrespect and behaviour, bringing the Council into disrepute. Much of this increase relates to a small number of parish and town councils, which is reflected in the data contained in the appendices. The report also explains why many complaints ultimately result in no further action. For example, where the standards process is being used to challenge decisions rather than conduct, or where evidence does not show a breach of the code. The training and development section of the report highlights the work undertaken to support councillors in the form of updated guidance, improvements to the complaints process and planned enhancements to our case tracking system from April 26. Looking ahead, the aim is to provide more training over the next year, taking into account any changes that may follow the government's recent consultation on strengthening the standards framework. Thank you, Chair.
Thank you very much. Anybody got comments or questions? Could I make an observation, just to echo what's just been said? I mean, in the West Devon bit, there are all these things about bullying and harassment and so on and so on. I think that's fewer cases than last year from memory, from the report. But are we talking about an increase in the actual number of incidents which have been proven, or just the number of complaints with no underlying?
Through you, Chair. Yes, there has been an increase in the number, but it hasn't increased the number of those where there's been findings of a breach or not to date. We're still processing many of the ones that would come in through this last financial year. But it's the actual number of complaints, and they tend to be restricted. At least half of them are 2 or 3 councils. So We have sporadic ones across the boroughs and the districts, but there have been an increased amount in a small number of councils. I have to say that this last financial year, that has been largely South Hams District Council rather than West Devon Borough Council. This is a joint point, as you pointed out, so you can see the whole picture that we deal with. The back office is just basically me, if you see what I mean, to show what sort of caseload we're dealing with. But there isn't any evidence that there is an increase in bad behaviour, so to speak.
Yes, I think
bad behaviour.
so. There's no increase in bad behaviour, but there's an increase in complaints about bad behaviour. Is there any actions that we can take, or any sportive actions or otherwise, with those individual councils?
We have taken an unprecedented move last month with a couple of those councils to say that due to the number that were considered under our policy as vexatious and tit for tat, that we were then suspending any new complaints from those councils, other than some very serious ones, and those relating to allegations of a non-disclosable pecuniary interest, because that's a criminal offence, so we would accept those. And I have to say that it seems to have worked. So we need to process the ones we've got. They were very repetitive in nature. So yes, it was an unprecedented step, and hopefully it's sent the right message.
Well, thank you for that. I think there's. Sorry, I knew this.
Can I just ask one question? Seems to be quite a lot of comments about the bullying and disrespect at the town council and parish council level. Does our training reach there, and our responsibilities in light of those councils, does that come back to us? Is that our responsibility to train those councillors?
We don't have a duty to carry out the training, no. We have in the past endeavoured to do so, but we've got capacity issues, serious ones, within our section that prohibits that. But they do have resource to the DALC and NALC, the National and District Association of Local Councils, for training, which they do use, as I understand. But the pattern to do with this allegations of bullying and disrespect, talking to other monitoring officers, does seem to be a national issue, and not necessarily a local one. I couldn't begin to surmise what the background is to that. I would be just guessing, but it does seem to be a national pattern, and an increase in the nature of those complaints, and also the relationship with some clerks and the parish or town councillors, which is quite worrying. And that, again, that is wider than the district and the borough areas.
Robert?
Thank you. I do recall asking the question, what could we do about the vexatious complaints about 3 or 4 meetings ago? It sounds as though you've taken that action and solved that problem, so well done. Thank you very much.
Well, thank you very much. I was going to just ask a sort of a parallel question about how much of your individual or your department's time is consumed by these, and whether an investment in the sort of actions you've taken, training, changing policy about vexatious accounts, can reduce that number. It sounds pretty good to me.
Well, I'm hoping to give you a positive a positive answer to that in the following annual report, Chairman. We, as you know, the committee agreed that we would tweak and review the actual councillor complaints process, and we have done. Had there not been this increase with a very small number of councils, I would say yes, it is already working. There have been, just to backtrack a bit, one of the big changes was that previously all of the investigation reports went to a hearing. So we'd have to have one of your subcommittees to have a look at those. Now we've taken out the findings of no breach at the investigation level out of that process. It is now delegated to the monitoring officer in consultation with the chairman or another member of the Audit and Governance Committee and the independent person. So we would have had 3 already this year for findings of no breach. So I would say, and that does take up a lot of both member and officer time in the preparation behind all of that and the paperwork and getting everybody to come to a hearing. So I think this time next year I should be able to give you a more positive picture of the increases, the more effective of the process. And as Councillor Edmonds says, we are also improving our back office system. At the moment it kind of tells us we've received a complaint on the date and when it ends, and I have to do it manually to find out this sort of information. From the 1st of April we've got a new, more detailed system, so I'll be able to give you quite readily available information on how many have reached a certain stage, stage 1 or stage 2, which ones have been withdrawn or aborted, or much more detailed information that might help you. Or might not, I don't know, but it's easier to do, so we're getting there. And then, of course, we're all waiting for the legislation. I think the government are busy doing other things right now, but the changes that can come out of the consultation that you all saw last year about giving more bite to the standards process needs legislation, because that's where it is at the moment. So the current process is under the Localism Act, so it needs primary legislation to bring those changes into effect. So it's a bit of a waiting game on when that might happen.
Thank you very much. That's very helpful. Are we all happy to note the report? And secondly, do we have, as a committee, any recommendations?
I think we've made changes, and we need to see those changes sort of wash through the process. So far, so good, I think.
Thank you very much. That's great. Thank you. Now on to, I think, the final item, which is the committee work plan. So what we have on page 211 is the work plan for the next 3 meetings, which is the 9 months, the municipal year. And this is a draft schedule, which I'm asking for your comments. And there are several other things that we intend to put into this particular schedule. And I think one thing that we're going to put in is a normal 6-monthly update on recommendations, feedback on the audit recommendations. And there's the private meetings with the internal and external auditor. And against all these particular items, they're going to be linked to the terms of reference that we previously agreed to make sure we've got a full coverage. I do note that July is really a heavy meeting, and October and November seem to be pretty close together. So I'll just throw it open for members' comments on the work plan till the end of this particular year.
I just ask, you chair the sort of wider ordnance governance framework, where lots of ordnance governance meetings come together. Has anything come out of that, which we're not doing, but most other people are doing?
I think that's a rather below the belt question, but no. What the committee is doing is moving quite closely towards best practice. And I was really pleased that when we did our self-assessment, whenever it was a few months ago, facilitated by the internal auditors, they were helping us to move towards best practice. The thing that we don't have in this particularly is the formal report back from the audit committee to the full council, which we discussed previously, but that's to be implemented this coming time. And I think that's to be scheduled into the full council, and that will have to come to this audit committee for approval. I'll ask internal audit Joe here to say if I've missed anything that we should be doing from their experience that we're not.
Thank you, Chair. So I think from memory from the last meeting, we had an action plan that we were working for in terms of that. So my recommendation would be to have that action plan reviewed to see if you are meeting the actions that are in there, if there's any slippage, etc. So that would be my recommendation, just to take that forward.
Thank you. That's item 5 on the 14th of July. thing, but it's the self-assessment of the Audit and Governance Committee and action plan. And I think when we did the self-assessment, we were considering whether to do it annually or biannually. So I think we really need to bottom that out with your help.
In terms of how often you should carry out the assessment, I think that's really down to the changes that happen on the committee. So I think if you are having changes on the committee, then it would be good to do it on an annual basis. Obviously, we've got an introduction of a new independent member who wouldn't have been in post when we did the self-assessment. So I think it would be quite a useful exercise to do on an annual basis.
Thank you. So we'll put that in as a separate meeting like we did last year. I think it'd be very valuable. Any other particular comments? Shall we just note this for further action?
Just to add, obviously, the self-assessment is your assessment of your skills. We are more than happy to facilitate that assessment again if you'd like us to in the future.
I think it'd be very valuable. Thank you. Any other comments? Well, hopefully we can get this finalised plan back before the next meeting. Thank you very much. I think the meeting is closed. Thank you very much for attending.